why is the seller selling? What's their motivation?
They don't need to go into negotiation because if the vendor denies the offer, they go, all right, I'm going to go down to the house down the street then.
You might get a great result for your property over your reserve, but then you're also competing against 3 or 4 other active buyers at that time, and that pushes prices high.
Today we're asking the question, is this the year buyers reign supreme? The 2024 property market was characterised by a few things. We saw rising property prices, we saw sustained high interest rates, and there were some dark horses when it came to which states were outperforming others. But towards the end of the year, we saw greater listings volumes, which did mean prospective buyers had more choice. Joining me to discuss if 2025 could play out even better for the buyer's side is Sarah Case, the Director of RT Edgar in Toorak, and property investment advisor Ben Kingsley from Empower Wealth, with 30 years of experience helping clients secure properties. It's really nice to see you both again. Sarah, how are you feeling about this upcoming year? What is different compared to 2024?
I feel like there's a lot more confidence in the market. I think people really kind of sat back earlier in the year last year to sort of see what was going to happen. They were hoping something was going to shift, and I don't think it did. I feel the start of the year was a bit more positive than the end of the year, and that's getting back to what you said about people sort of saying, well, I don't think it's going to get any better. I don't think it's going to get any worse. We haven't seen an interest rate drop. I just want to move on and put my place on the market. And I think a lot of people had the same idea, hence the large amount of stock in that prestigious area in Melbourne, which again became more of a buyer's market than a seller's market.
Ben, does this check out with how your clients are feeling? Do the buyers coming to you have the sentiment of like they've got the upper hand here?
Oh, look, there's markets within markets, so it depends on which state you're talking about. Certainly Melbourne has had obviously the challenges with our governments and also the higher land taxes and all of the sort of changes.
That's a whole other podcast.
Yes. So that's the challenge here. And I think that's absolutely led to a buyer's market in Melbourne. And I think we're seeing it coming into Sydney now, where we were hoping at the start of 2024 that we'll see these interest rates. We're going to have an interest rate cut at some point.
Yeah.
And that just didn't come. And then you've got markets like Perth, which were flying. They had a great year, and affordable markets have done really, really well in terms of our capital cities. And I think that will still be a story. And I think interest rates will still be the trigger for the sentiment because a lot of people have been sitting on their hands in terms of what they're doing. And I think that will also drive a bit of the investor activity as well. I do think that people feel comfortable at their job, but they're not necessarily feeling comfortable at their finances just yet. So a couple of rate cuts just might change that sentiment.
And also give them some confidence again. I feel like the lack of confidence has just been that bit lower than we haven't seen for a long time.
Sarah, if it is that balance of power shifting from the seller to the buyer, what else is causing it aside from, I guess, more choice?
I think it's about motivation. Why is the seller selling? What's their motivation? Are they downsizing? Are they upsizing? Are they moving? Are they doing, a tree change, sea change? It's all about the motivation for them. And last year, I think, there was a lot of overpriced stock on the market where the vendors priced the property and the agents went along with it. And they're coming up for second and third campaigns now. I've got one that's, $2.5 million less than the agent had it on the market last year. So if the properties are priced well, they will sell. And the buyers are very smart and they have access to, all the information now more so than they ever had. And sometimes they've seen more properties than us because they've been through, every agent's open for inspection. So they're very well educated.
So it sounds like now that the sellers are kind of clicking into gear a little bit more and maybe holding more of a realistic mindset.
That's correct, and meeting the market.
Yeah, that's actually really assisting buyers.
If it's priced right and it's about the agent, the experience of the agent and educating the vendor as to why the property is worth what it is. Now, we're not the end buyer at the end of the day, and we can go on, what properties have sold for in the street and around the street, but it comes down to, is it renovated? Is it unrenovated? How much work? And it's about educating the vendor as to where the price sits. And if they're on board, you're on board, you're going to have a really good campaign.
I think if you build on that, the other story is the household had record levels of savings. So right through that COVID period, they were able to build up these savings. So you have 13 rate rises.
That's gone though.
Yeah, well, that's what's happening, right?
Yeah.
But they've
Cost of
held
living.
out.
Yeah.
They've held out. They've basically said, well, mentally, I'm going to keep holding out because we can, but they didn't meet the market. They had a higher expectation. So all of those things are changing now. But, you know, their savings levels are going down. Their ability to hold on is so that they have to change their perspective, and that's exactly what they're doing.
And the big thing was is that, you know, in COVID, a lot of people say my demographic in that Stonington market, you know, even Burundara, they bought the beach house thinking they're never going to go overseas again.
Yeah.
And they paid a premium 30%, 40% above that for a little shack down at the Mornington Peninsula or Bellarine Peninsula. And, you know, they're borrowed against their principal place of residence. And then, you know, something's got to move with all these interest rates.
Correct.
And so then they've tried to put it on the market down there, and they've had to drop the price and they can't sell it. And what we're finding is, you know, it's been better this summer. There's been some really good transactions down there and some confidence down at the beach, is that those people that had that and couldn't sell down the beach, they've had to sell their principal place of residence because the pressure has just been too much.
Agreed.
I want to drill down on like when we talk about it's a buyer's market, like the term buyer is quite loose because it does encompass everyone from first home buyers to upsizers to downsizers. Now, over the past 5 years to October 2024, national dwelling prices have increased by 47.9%, which is massive.
Yeah.
You know, amongst our capital cities, you know, Ben alluded to it before, things actually look very different. So Adelaide has increased by 80% in the last 5 years. We've got Brisbane also at 80%, Perth 79%. So those three capital cities have seen the strongest price growth. Melbourne's lagging behind at 17%, Darwin 29%, Canberra 38%. The margin between those is quite significant. But what that shows us is that it's potentially the upsizer market who could benefit the most this year, thanks to that major equity growth in the last 5 years that they've seen in their properties. Ben, with this in mind, do you think this is the buyer that could be most active in 2025?
Yeah, it's an excellent question. I think the way in which we study the sort of behavioural stuff here is that if you're an upgrader, you want to basically get a good price for your home, but if you're getting into a moving market, you're going to have to pay a premium to get into that next level, that more exclusive street or whatever that looks like. So it's a great time for an upgrader to be buying in a buyer's market. It means that, okay, I mightn't get necessarily the price that I wanted for the current property they own, but I'm going to buy better in that more exclusive area, and I believe that that property is going to perform better over time.
Absolutely.
That is the main driver in terms of this, because if we're in a moving market, it's very hard. So you might get a great result for your property over your reserve, but then you're also competing against 3 or 4 other active buyers at that time, and that pushes prices higher.
Okay, so that upsizer market, whilst they do have, you know, a fair bit of cash to play with, that competition element might be something that draws them back. But Sarah, in your patch in Toorak and surrounds, who's selling and who's buying? Is there an exchange of kind of the boomers downsizing?
Absolutely.
And selling off those family homes that then is going to an upsizer?
Absolutely, 110% correct. Is we're seeing so much more movement at the top end of the market. Houses that haven't been on the market for 25 years, 30 years, they're being released. And some of the, you know, the wealthy families are, you know, helping their children go into these, you know, selling their smaller houses. When I say smaller, $7, $8, $10 million houses, going into these bigger $15, $20 million houses. But even seeing a lot of those buyers in the $3 million market upsizing, say, from your Glen Iris, Ashburton, Malverns, Hawthorn, you know, Canterbury queues, coming across to that Malvern, Armidale, Toorak, and really upsizing, being in the school zones and knowing that they'll always get that great return because they're going to be there for, you know, say 5 years at least, you know, maybe 5 to 7 on the stats of people moving. So it's a really positive sign releasing those homes because, you know, if you look back years ago, you know, there was a lot of stagnant, you know, you had to sort of knock on the doors to get into these homes, whereas now people are saying, those downsizers are saying, look, I don't see the market getting any, you know, better as far as in a year it's going to be booming, but it's not getting any worse. And I have confidence enough to get a fair and reasonable price and hopefully a premium for my luxury home that, you know, has been in the family for 25 years.
Yeah, things are just like stable enough.
They're confident enough, you know, there's that confidence in there to say, I'm going to put it on the market and meet the market.
Are they buying, you know, things that might need a bit of work, or are your buyers more interested in a turnkey home where there's not one upgrade needed?
I've seen more really in the last last 2 years of the confidence in buying unrenovated properties than we've seen because of the pricing, of glass and steel and bricks and, all going up. And people have been very nervous that aren't used to renovating. It's really, there's a limited market for stuff that needs the big extension and the box on the back. And then you come down to something that may have really great bones and just need a cosmetic, maybe a hole knocked in here, but nothing really structural. The confidence in that market, I feel, is really, has gone through the roof. And the prices have gone up on those unrenovated Victorians that, have great bones, whereas a couple of years ago they weren't performing. But still the best market is the turnkey, and that's where you're getting that $1 million, $2 million difference because people, they're working, cost of living, kids at private schools gone up, 3 or 4% during the year. So, they've got all these outgoings, and to try and manage a renovation or a new build, they'd rather just pay for it, move on, happy wife, happy life.
They're time-poor professionals, aren't they? Like they are, their job is they're earning over here, so they don't want to have the stress of that. We've seen, 1,600, even 1,800 different types of business builders failing over the last 12 months. So that's a big story. So there is that lack of confidence in the new, but the ones who are doing it and the builders who can hold in that space, they are going to have a good year because ultimately there's such limited stock of that beautiful sort of shiny and bright that's in the market at the moment.
Well, we just had one in Lewisham Road in Paran, 88 Lewisham Road, which is Lucy Clemenger. She's an architect. She did a fabulous renovation. It was 8 years old, of a single level master bedroom downstairs with 2 bedrooms upstairs, like kids' rooms, backing onto a park. And, I was probably the best performing property in a number of years. We launched it on a Wednesday and on the Thursday, the next day, we had 27 groups through, and it hadn't been on for 24 hours. On the Saturday, we had 51 groups through. That was 4 to 4.4 million. And by Saturday, we'd had, 70 groups through. We'd had 120 groups through and 3 opens, and had people ring and say they missed it on the Saturday. Could they come on the Monday? We had another 21 groups through on Monday. Put the open time on the internet, 5 to 5:30 on a Monday. And it was completely done. It was 8 years old. It was architecturally, it was beautiful.
It's a great reminder, isn't it, that the great properties, the ones that have that owner-occupier appeal, in any market sell brilliantly.
And because it had a master bedroom downstairs, it opened it up to the downsizers that didn't want an apartment.
There we go.
So, it was competing with the downsizers and the young ones. And we sold it within 17 days, and we had 12 bidders at our boardroom auction, sold for, just over $5.2 million from 4 to 4.4. So that sort of stuff is performing really well.
With the increase in stock, are you seeing that buyers are a little bit more, I guess, bullish in market? Are they holding their ground a little bit more when it comes to offers?
I've never seen it more black and white from a buyer's perspective. They come in the old days, they used to maybe make 3 offers, 4, we'd negotiate maybe a week and a half. Now they say, here's my price, take it or leave it. And you're having that conversation with vendors who've normally sold before, and they say, oh, well, it's their first offer. No, well, I want another 200,000. But I'm saying, no, this is their final offer.
Well, that's a really big signal in my mind that it is a buyer's market, because they don't need to go into negotiation, because if the vendor denies the offer, they go, all right, I'm going to go down to the house down the street then.
Yeah, and that's what really happened a lot in spring. It was one time, and, like if someone loves a property and it's expensive, you think they'll stay on it. But they were just like, no, I'm on to the next one. And you lost them, and you'd have to ring the vendor and say they're gone. What do you mean they're gone? Well, I tried to tell you, but you didn't listen.
Normally
in the nicest way.
Normally that's an agent's bluff. They go, oh, look, they've got another property that they're interested in, but it actually did.
That's a story of supply. Yeah. That's a story of there's a couple of choices, so I'm going to shop the market when I can, especially in that exclusive area. If we come down into the sort of middle class and the entry-level affordability stuff, what was happening last year was there's a lot of investors playing in that space. That market moved hard. It was the best performing of all the quadrants, was that lower affordability, 25%. So that's when you will get the multiple offers and, the multiple parties bidding. And I expect that will continue somewhat in some of our more affordable capital cities. I think Melbourne is also one where borderless investors are looking at Melbourne and go, why is Melbourne so cheap? Maybe I need to add one, I need to add a property down.
Get them to call me.
Well, they're not unfortunately buying in that sort of 3 to 5 million. The cash flow is not great there. That's why, again, it's always about studying the markets within markets. So absolutely, I think the top end of the market is going to, and usually that's the trigger. Like, so when you follow a flow of growth, it usually starts from the inner city areas and then trickles out and ripples out to those more affordable areas. But what we have seen in these other markets is that those cheaper areas performed very well, even though in, say, Perth still did quite well in the exclusive ranges on the beachside suburbs there, but not as well as the entry-level suburbs in that sort of 400 to 600,000. They experienced 30, 40% growth in 12 months, which is crazy numbers.
Wild,
now, off a lower base, I mean, you still get 20% on a $5 million property. It's still more money in the back pocket. But that's the story that we've got here. So I really do think that as much as it is a buyer's market and we're starting to see that stock levels, the sentiment can change pretty quickly off the back of those interest rate calls.
Aside from this upsizer market, Ben, is there any other buyer groups that you see taking advantage this year, and who are they?
Yeah, well, I'm really thrilled to see the number of first home buyers that are coming into the market. And that is a product of, even though we don't necessarily feel well off as much as we have, unemployment or employment has been super strong in the last 12 months and people feel confident about their job. And so with that, they're starting to think about, okay, well, maybe I will buy my first home. And we're seeing down here with the trade-off of investors getting out, it's actually opening the door for first-home buyers to get into the market down here.
And good quality stock too.
Yeah, I agree. Yeah. And I can make a case for investors coming into the Melbourne market just on the affordability and on the fact that Melbourne's underperformed over the last 5 years that we've seen there. But I can also make a case that with the current government in place and with the risk of rental freezes and all of these other things, and then that's what they're going to be scared of. And investors need confidence. They're running a small business. I mean, ultimately, they need a return on investment. So that's why they are buying in droves in Perth and also in Brisbane. And I think Sydney might also experience some of that as well. So there's a real variety of opportunity out there.
My final question to you both, even though it is a buyer's market, how long do you think it's going to last?
The $64,000
How long's a piece of string?
question straight up. I think we've got to also assess it from markets within markets. I think if we think about Melbourne, absolutely, I do feel like it's going to be a buyer's market for a little while. Probably halfway through the year, subject to no radical changes from our governments and a few other things, and no more interruptions in terms of letting the market do its thing. I think Sydney's going to fall into that category as well. I think, it's going to take a little bit of time and momentum to get that sentiment moving. I think Perth is going to be, again, very strong this year. I mean, all the fundamentals for me about the economy and what's happening there seem really good. Southeast Queensland is always, attracting new people, and it's still relatively affordable in real terms. And then the Adelaide market, I think it's probably off its peak. So I think that will start to come down. I think that will move in to more of a buyer's market. And I think Darwin's probably the smoky. If you look at the stock that's on available, they're literally about 1% of their market. So it is tight. The investment yields are great. So that's my little smoky for the year.
Darwin.
And then Hobart.
Yeah, right, I might get
Hobart's
some
probably
research
and
on.
Canberra are sort of two markets that I'm not seeing enough fundamental demand in those markets. And from an investor's point of view, we never touch Canberra anyway because of the land tax premiums are basically ridiculous there. So there's just no return on investment.
And Sarah, what about you? Are you feeling confident in buyers all year, or do you see some movement?
Look, I think our market is very different from a lot of, the rest of kind of Victoria. We are in the prestigious area. It's Donington, Burundara, Bayside as well. We have a lot of movement for schools. I don't feel it's so much of a buyer's market. I feel like, when you've got a really good product as a vendor, the buyers are then going to compete as long as it's priced well. So I feel like last year was more of a buyer's market in that spring, halfway through last year until the end of the year. But I feel like this year there's good quality stock coming up. There's good buyers in the market and they're going to have to compete for that good stock. So, is it a buyer's market? I think it's probably, the vendors have a great product and there's going to be multiple buyers. So then it becomes more of a vendor.
Yeah.
Well, thank you both so much for giving me your time. I hope that our prospective buyers this year have come away feeling a little bit more confident about what could be in store for them this year. And I hope you've enjoyed yourself.
It's been
Thanks,
great.
Alf. Yeah.
Thank you so much.
Thank
I
you.
really appreciate it.
Thanks for joining me. This has been Real Talk. For your weekly fix, please follow wherever you listen to your podcasts and tune in next time for more real questions, news and insights on the topics that matter most from realestate.com.au, Australia's #1 address in property. All information provided is general advice and opinion based on current market conditions. These opinions should not be treated as investment advice. Always obtain advice based on your individual circumstances.
Real Talk acknowledges the traditional custodians of country throughout Australia and their connections to land, sea, air and community. We pay our respects to elders past and present.